So to give you a breakdown of what this is pretty much how you structure your business. And I helped a couple of our trainers even in our business with this method. So when you have your training business, to say, Nessa's Training LLC, S Corp and stuff like that, and hopefully you guys know how to do that. If you guys don't, let me know. Let's say you guys made $65,000 in that year, and usually, if you do it right, you should put all your expenses as far as your travel, your education, eating out. You could, like I was talking to my son, you can even rent out your own place where even behind him, that's his own room that is set up for his podcast. So that's a business expense. So you can rent out your specific area. You can kind of determine on how much you can spend on that for your business. So you can put all those expenses on it. To where if you don't have a legit business, and that's totally fine, because a lot of people still do this, but if you can do it the right way, you'll save a lot of money on taxes. And a lot of people that I talked to during and after the conference, that was the first thing that they said. A lot of the trainers, especially when you just start out, you just want to get going. You just want to train. That is what you do, is you train. You don't worry about business stuff. You don't worry about taxes. You just want to do the thing that you love. And so that is great, but I want to help you guys out, because I know during tax time, it's not the easiest thing to deal with. So if you're running it under your personal and you make $65K from your training business, but you're doing it under your personal account, you'll get taxed on that $65,000 no matter what. So the IRS doesn't care about if you were eating out for business, or they didn't care about if you went to the conference and that was a business expense. They don't care about that. If it's out of your personal account, you'll get taxed on that $65K no matter what. And so if you're able to open up, if it's just you and you're just doing your own business and you're just doing it solo, you made $65,000 and you did all your other expenses as far as your traveling expenses, even your eating out. So if you have a significant other, you guys can go out and you could say it's taken out for a client. You can go to a movie and get inspiration. If anyone's watching a new Adam Sandler movie, highly suggest it. Very good movie. And but you can run all these expenses, from here. Now, if you're paying $3,000 in expenses for your own uses, like your food or your groceries or whatever it is, you're not getting you're getting taxed on that no matter what. But if you're running under your business, you can run all your personal expenses. You can't go crazy on it. You can't do like, necessarily your dog expense. Like you kind of work around which ones are actually business expenses that you can kind of use as business expenses and then go from there. So let's say you use $40,000 in expenses, but you would normally do that on your personal. Well, like I said, they don't care about that. So if you actually did that under your business LLC, your business bank account, and then now you have $25K left over in profit, and now you put this from the business and use that $25K and pay yourself into your personal account that $25K, you'll be taxed on this $25K. You made as a person $25K, and now the business, since they had $40,000 in expenses and now paid an owner's withdrawal of $25K, the business will be taxed on zero. So you'll be counted as, you didn't make anything this year. So you won't be taxed on anything except for the LLC, which costs about $800 a month. And so that's a big difference, to where if you're making $25K on paper, this is where a lot of people get misconstrued if you're not taught the right way or don't know these things. That when people are saying, oh, why doesn't the rich pay on taxes? Because they're a little bit smarter than every other person, and they do it kind of the right way. They find loopholes, they find the gray areas, but this is simple stuff. But you'll be taxed on this $25K. You'll probably get money back. But really, you did your expenses on your business, and so that's where you're winning. So just keep that in mind. That's a mindset thing to change up.